Patriot Nation, I'm very excited because I'm going to show you today how to save quite a bit of money immediately on your monthly payment. And it's going to show you how it's going to add up over time to some big significant savings. If you bought in the last couple of years, because we all know rates started going up about 2 years ago in the middle of 2022, we're going to drop you down from wherever you are, 6.5 to 7.375, wherever you are, somewhere in between there. We're going to drop you down to the mid fives, about 5.625. I'm going to show you how I can do that, why nobody else can. We're going to go over the convenience, and we're going to talk about the closing costs, which are greatly reduced. And believe it or not, you're going to do all this without coming out of pocket at all. You will not write a check at closing at all for this. Everything will be rolled into the note, and you're going to rock along at a lower rate with a lower payment, saving money along the way and enjoying life. So as I like to say, let's kick off this rodeo right now. Hi, folks. I'm 𝐓𝐘𝐒. I'm the Mortgage Patriot on your side, here nestled in the hill country above San Antonio, Texas, serving proud Texans and all you great folks all around the country. Now, another great one today because we're going to save you a lot of money, and we're going to save it starting now. Because if you're like a lot of people in the country and you had to buy over the last couple of years, you know that we spiked up in interest rates starting about the middle of 2022. So that was about 2 years ago. So you're probably sitting in, at least on the FHA world, probably a 6.5 at the very least to probably 6.75, 6.875, 7.125, maybe as high as even 7.375. I'm going to show you a way to get you all the way down to 5.625. To 5.625, I'm going to show you what that savings looks like, and I'm going to show you how convenient it is, and the closing costs. I'll give you some estimation of that because it's going to be far reduced, and all the benefits of just a streamlined refinance in general. Let's get into all those examples right now. Actually, before we do that, a quick note. If you would hit the like and subscribe below, please. It really helps me bring good videos to you because of the YouTube algorithms that really are assisted when you like and subscribe and comment. So comment, if you would, on maybe what kind of rate situation you're in and why you thought maybe you couldn't refinance up to this point. Because right now, we come off of the highs. This is the middle of 2024. We've gone now, and we're at 4-month lows. We're still in the upper sixes as far as an FHA is concerned, depending on your credit scores and so forth. But I can offer you a 5.625 today, and I'm going to show you why as we continue on in this video. So hang on, watch it all the way through with me. Before I get into an example and I break down some numbers, I want to show you a bond chart, a mortgage rate bond chart, going back only to 1990. So if you were born somewhere in the last 30, 35 years, a lot of y'all seem to think that it was very normal to have interest rates in the 3s or 4s. Well, it wasn't. So anyway, this rate chart right here shows you in 1990, we started out about 10%. We were actually higher before that in the 80s, believe it or not. So in the 90s started, we broke through 10. Everybody was dancing in the streets thinking that was great. And we got all the way down. We grinded all the way down, all the way to those wonderful historically low rates that we saw in 2000, early 2021, where we got down to even the upper 2s or mid 2s even. Once we got to 2022, in the middle of that, we started skyrocketing back up to what we would call more of an historical average. So we're sitting now in the mid 6s to low 7 range, depending on your interest rate and what kind of home you're buying and what other factors that I'll get into in a second. But that's where we stand. So the notion of trying to wait for 3 and 4% rates is not a good financial decision. You want to refinance when it makes sense mathematically. It's just that simple. I'm going to show you why 5.625 is going to be mathematically very logical for you to do in whatever rate you have right now, be it 6.5 or higher. So let's get into some examples right now. Your interest rates could be anywhere because it depends on lots of things, right? Interest rates depend typically on about 4 factors. The first one being, what type of loan did you get? Was this a VA loan? Was it a USDA loan? Was it a FHA loan? Was it a conventional loan? And then what type of property did you buy? Was it a single family home? Was it a condo? Was it an investment property? All these have different rates associated with them. How much down payment did you put in? Was it a typical 3.5% for an FHA? Was it 0 for a VA? Was it 10, 20% for a conventional loan? That plays into your interest rate. And of course, also your credit scores are the biggest factor for interest rates. If you have a 620 versus a 680, you're not going to get quite a nice rate. So let's use an example. You know that I like to use $300,000 as a purchase amount. Why? Because that's just a kind of a typical median income property, first or second home purchase across the country, $300,000. We're going to assume a couple things. So $300,000 purchase that you had the last couple of years, using an FHA loan, 3.5% down typically, with a 680 score or better on a single family residence, not a duplex. So those are our assumptions. We're going to use the interest rates that you might be in. We're going to start with 6.265, 6.875, and 7.125. Some of you may be out there thinking, well, Gosh, I'm even higher than 7.125. Well, sorry about that, but that just makes the savings that much better. You should fall into somewhere in these ranges. So let's look exactly what those numbers are going to be given a 10-year, if you stay in the house for 10 years, or if you continue to stay in that house forever for 30 years. And let's look at the interest savings. So check out these numbers. They're not small savings by any means. They're significant. If you bought your home a couple of years ago or up to about 6 months ago, and your rate is anywhere from, say, 6.625 to 7.125 or even higher, then look at this chart right here. And I show you kind of what the monthly payment is. That's just the principal and interest. We're not talking about taxes and insurance, just the principal and interest. And I'm showing you now a 7-year horizon. I said 10 years earlier. I'm at 7 years. 7 years because that's the average time that people hold their houses. Typically, it's about 7 years. So what's the savings and interest over 7 years? And what's the savings if you held all the way through to 30 years? And again, it's not small. So if you're at, let's say, 7.125, your principal and interest payment is $1,950. If I can get you to 5.625 right away, your payment goes to 166. Not bad at all. You're saving about almost $300 there. 200 and what is that? $84, whatever it is. So that's a significant number per month. And look at the interest savings just over 7 years. $146,538 in a 7.125 versus $114,234. That's about $32,000 of savings just in 7 years. And if you extend that over 30 years, then that savings becomes over $100,000, about $112,000. These aren't small numbers, like I said. What if you're at 6.625, just dropping you a full point, 6.625 to 5.625? What would that difference look like? Well, your payment's going to drop, looks like almost $200. Nothing wrong with that. I'll take that all day long. And your 7-year savings of interest is about $21,000, $21,500. Savings over 30 years is about $67,000. So anywhere in between 6.625, 7.125, you're going to save significant amount of money. It's worth your time. So now I'm going to show you, there's a QR code you're seeing on your screen right now. It's going to ask you 4 questions. If you hover over that, it's going to just ask 4 simple questions. 1, what is your approximate credit score? What is your current interest rate? What's your approximate loan balance? And the month and the year that you bought your house. Those 4 factors, your credit score, the interest rate, your approximate loan balance, and when you bought your home. With those 4 questions, if you answer those, I'll get it back on my side and I'll fill that out. I'll tell you approximating what a 5.625 will do for you right away. It's going to show you those savings and you're not going to believe it. So let me show you a couple of quick advantages. I told you about the convenience and I told you about the reduced closing costs of what they would call a streamline refinance. Let me give you a little behind the scenes baseball because there is a reason why I can offer 5.625 when nobody else can, when the market seems to be around 6.625, at least for a FHA loan with a 680 score or better. And that's because I'm a broker and I can shop lenders. I have about 150 lenders at my fingertips to find the best deal. Well, there's one lender outstanding in the country right now that's willing to basically cut their profit margin extensively for a streamlined FHA deal. And I have them available to me. Also, so there's a base rate that everybody goes off of. And the base rate right now is, let's say 5.375. So the lender puts their spread on there, which would normally be a lot higher, but they're bringing it way down. And the loan officer, like myself, we need to be paid as well for our professional services, but we're willing to cut that down as well. So you have 2 parties, the lender and the loan officer, both willing to cut substantially what they would normally be making on top of the base rate. We're passing that on to you now at 5.625. That's how I can get such a great deal beyond anybody else right now. Hey, I wouldn't be called the Mortgage Patriot for nothing if I couldn't be helping you out. So I've been using the example of a streamline, so-called streamline FHA loan. What does a streamline mean? Well, as the name would imply, it's kind of a fast track, if you will, over what a traditional loan effort would be. When you first purchased your house, that was quite a bit of paperwork, took a long time, at least probably 30 days, sometimes quite a bit more, because you have to get an appraisal, and you have to bring in all the documentation and so forth. Lots of work. On a streamline FHA, sometimes there's not even an appraisal. They do normally what they call a desktop valuation. So there's not going to be an appraiser coming out. You're not going to be coming out of pocket for $700 to $850 for an appraisal. It'll be, if it's anything at all, it'll be a desktop appraisal typically, and that usually runs about $300 or less. By the way, you will not be coming out of pocket. You're not going to write a check at closing. All the costs get rolled into this loan. I'll repeat that. All the costs that are going to be greatly reduced are going to be rolled into this loan, and you do not have to write a check. So it's convenient because it's going to close quicker than 30 days or later. It's going to usually be within 2 to 3 weeks. That's the convenient aspect of it with less headache. And the traditional costs are all reduced. A reduced appraisal cost, reduced title fees, reduced processing fees, and reduced underwriting fees. Those are your main fees. All of them reduced, sometimes more than 50%. They're usually around a third to 40%. Okay, so your cost, which will be greatly reduced, will be rolled into your note. You will not have to come out of pocket typically. And you're going to get a check back in the mail probably within about 4 to 6 weeks. Where is that coming from? That's coming from your existing escrow account. Your existing escrow account has been building all this time during the year. It has your property taxes and your insurance, home insurance inside that escrow. You're going to fund that as well on your new loan with new monies. They're going to get rolled into your note. And so your existing escrow will get sent to you in a check. So here are the benefits of the FHA Streamline. You're going to save a lot of money with interest, right? We've already showed you that. It's going to be more convenient. It's going to have less closing costs. All those costs are going to be rolled in. You're going to skip a month's payment. And lastly, you're going to get a check back in the mail for your prior escrows. So it's going to be like Christmas money a couple months before Christmas, hopefully. It's going to fund your Christmas maybe. Cannot beat it. I'm the Mortgage Patriot. Here's the QR code. Fill out that, hover over it, fill out those little pieces of information. I'll get that information back and I'll send to you an approximated savings of what you can expect given all those factors of your interest rate and your mortgage payment and so forth. So looking forward to helping you out. I'm 𝐤𝐍𝐿, the Mortgage Patriot, on your side. Make it a great one.